In this video, we're going to talk about how to use price action rules to help us predict directional paths for the market and where are the high probability setups. Today's session opened with consolidation. We have price swings up and down. The downtrend played out with the break push to new extreme. Market reversed to the upside, so our most recent bias is bullish, and I expect for prices to test the new extreme. Now, prices are breaking below the EMA, so I cannot go long as we're below EMA. I want to see the push above, and more importantly, the market is about to open around this area, and we're not taking setups right around the open. There can be a spike in volatility, a little fake out trap, so I gotta be careful. I gotta wait for a while. We broke higher and market created push to a new extreme, but only relative to this high. As you can see, there's also a highest high right here that is created by news spike in volatility. So now we have a little bit of a dilemma. We have to be careful, because if I'm gonna get a failed second entry long below EMA, I would not take it simply because there's a chance that the market wants to test the technical new high that is higher than this high prior to break. But also, if I'm gonna get second entry long at the EMA, I'm gonna skip it because there's a possibility that the market considers new high only this high right here. So it's a little bit tricky only because there is spike in volatility. News can sometimes distort the price action. So just something to take into consideration. Also, what I like to do is I like to measure the first leg, copy it, project the target where prices are attempting to go to. So let's see what's gonna happen. EMA is going to be important. I'm gonna respect the correction. You have a new high, first entry long, second entry long, but as we talked about, I cannot take a second entry long just yet, just in case this is just spike in volatility and we have a break a new high. Let's see what's gonna happen. Okay, EMA keeps holding, and now we have high-low confirmation setup. And this is interesting because high-low confirmation setup is confirming the second entry long. EMA keeps holding once, twice. There is small support. We tick lower, reverse up, great single bar, and this is great high probability setup because this is now confirming, okay, market want to test this technical new high simply because the EMA is holding. We can't even break below EMA. So it's a great high-low confirmation setup. We waited. We didn't take the second entry long. We waited for the confirmation, and EMA keeps holding again. Great single bar, tiny risk, 2 points, and market keeps working higher and keeps working higher. Now, I'm not going to be fading the breakout simply because the overall structure looks too bullish. EMA keeps rejecting too often. So there's a chance there can be slightly wider uptrend, but I gotta be careful. I don't want to draw a wider channel when it's not fully confirmed. Let's see what's going to happen. And prices are trading to the upside. EMA held again, and this is massive rejection. So now it is confirmed there is broader bullish channel. You can see how nicely it is here. A lot of confirmations. So I'm gonna plot a trend line, copy to the top. We are way past the measured move, so this is indicating, okay, the structure is too bullish, and you can see how nice and clean the trend is. Consistent series of high highs and high lows, push phase and correction phase. So right now the trend is bullish, and we're only thinking about buying. Can I get a second entry long at the EMA? Market keeps trending higher. I still want to see the pullback. Now we have small overshoot. Let's see what's going to happen. I can expect stronger pullback in the opposite direction. But prices keep trending higher. As you can see, it's not acting as overshoot. But one thing that I cannot deny is that this is definitely looking like overextended push phase. Yes, I can widen channel like this because you can see prices keep working higher. But this is awfully similar to what we had 2 days ago, Wednesday. We had exact same type of market structure. We had nice consistent uptrend with push phase, correction phase, push phase, correction phase, push phase, correction phase. And suddenly we have way too overextended push phase because when you're watching this live, it acts as overshoot. There is no pullback. You can't even pull back to the EMA. You can see how overbought this is. This is way too overextended. So because we had the exact same pattern 2 days ago, you now understand exactly what the market is telling you, what the price action is telling you, and you know you expect stronger pullback in the opposite direction. So I'm not going to be rushing to go long. Let's see what's going to happen. I'm going to redraw the downtrend working lower. I cannot take entry right here. This is only 4th entry long. No good setup. We're below EMA, so I cannot take any setup. And prices are correcting to the downside. So exactly as we expected. I'm going to redraw slightly wider channel. I'm not going to be buying off of this channel simply because it looks like there's a brand new downtrend working lower. The push phase was overextended. There's a chance that there is truly just a larger overshoot. So I gotta be careful. Once again, very similar to what we had 2 days ago. So right now I can't take anything, I gotta be careful. Now, this was quite decisive push above EMA. So I was thinking, okay, we may have a resumption of the bullish trend. Can I get a second entry long at the EMA? No, we broke below, so right now this means that the correction is still taking place. Also, the exponential moving average is no longer pointing up. It is flat going sideways. So we can draw additional market structure. Why am I drawing consolidation? Well, because I can combine many rules. I expect this trend to continue to get a new high after break, so we expect new high to be tested. But I can also think about buying at the bottom or buying some failed breakout. But in order for me to go long, even though I expect market to create the new high, which is clear, so we understand where the market is going to go. Okay, now I have to time the entry properly. I need to see some push above EMA, because as long as we're below EMA, you can never predict how many pushes lower there's going to be. But I need some failed second entry short, new low first entry short. Can I get a failed second entry short? No, there is no break below this bar low. So nothing is happening. We're back below EMA, so now we have confusion. I gotta be careful, because if I'm going to zoom back, I can measure the first leg, copy it, and we can project the second leg down. So I'm really going to zoom back. You can see nice uptrend, overbought area, overshoot, can generate stronger pullback. What's going through my mind is, okay, market is taking its time. This is normal because market cannot rocket higher due to the fact that this is overbought area and the correction is going to be stronger. If there is no overshoot, the market would most likely already create new high. But because there's overshoot, the sellers still are in a game. The correction is taking much longer. One leg down, break second leg down. And once I see to get pullback, I expect new high to be tested. Simple price action. This is how price action acts. And you can gain an edge by understanding where the market is going to go. Now, no good setup here. Everything is flat. Everything is sideways. So I got to be careful. I can't take anything. You can see small resistance, flat EMA in the middle of these bars. I got to be careful. Market is trending lower, so I'm going to redraw the short-term downtrend. Okay. Break. Push to a new extreme. No good signal bar. This is quite decent bearish push. We're finally breaking above EMA, so now I'm finally starting to pay attention. This is exactly what I like to see, because we have one leg down, break second leg down. Push above EMA is indicating, okay, now finally the sellers gave up. They're all going to get trapped because it's looking like the market is about to reverse. They're breaking the trend range. All the sellers, they're starting to short here. They're trading the breakout strategies. You can see massive push above EMA is indicating all these sellers, they have to exit. But there can be one last trap. You can see new low, first entry short, pullback, second entry short. But this second entry short is not good second entry short to take. It's against the bias. Downtrend played out. We need to get new high. Fell breakout out of the trend range. We are going higher. So in fact, we want to take the other side of these orders. And now we have double high probability setup. We have a second entry long, which is also a failed second entry short. Now, very tempting setup, but is below EMA. Had this setup been at least partially above EMA, you can go long, because all these sellers are going to get trapped. Like this, it's still a bit more aggressive, but you're already thinking, okay, this uptrend is new high. We're going to go higher. So more advanced trader already understand what's happening here. And now we have a high-low confirmation setup of the second entry long and a failed second entry short. And this is also great high probability setup, because this means that right now we're back above EMA. We need to get new high. You can also predict possible wider channel because it is with the direction of the main trend. Great confirmation of two high probability setups. The fact that we need to get new high, failed breakout as well. Great entry. Market keeps working higher. We have a new high, first entry long. I want to see second entry long. Now, this is tempting because look at the massive rejection. EMA is holding, trend line is holding, but it is just a first entry long, quite far up. Not the easiest one to take. Can I get a second entry long? I cannot. Market keeps correcting. Okay, so now I was really getting excited. I can get some second entry long at EMA. We have stronger correction. And notice what happened. We have a second entry long here. And if I'm going to zoom back, the support we identified earlier is coming into play. So this is important key level where you expect buyers to step in. And also, the short-term downtrend has overshoot, which means overshoot can generate stronger pullback in the opposite direction. So not only this uptrend is new high, the bigger channel is new high, we're at the bottom of the trend range. It's holding. Only problem is this bar didn't tick below, but not a bad entry to consider because the support is holding. All channels need new high. You have overshoot, so you can ride the momentum higher. I was really looking for high low here. Am I expecting new low for this downtrend? I'm not. Not only all trends are expected to reach the new high, but because of the overshoot, I'm not expecting new low because overshoot can generate stronger push in the opposite direction. So I'm not expecting new low. In fact, I want to get on board with the bulls, but this high low is not full at the EMA. You can see there's still gap, and this is quite a problem. So I was really getting ready to take this because context aligned perfectly. We need to get new high. You know, in a situation like this, your gut feeling is telling you it's going to work simply because this second entry long was so strong. All trends need to get new high, but you know, I don't like cherry picking, so you know, more advanced trade I can consider, but it's not for the EMA, so I don't want to mark it. Can I get a fast second entry? Short, I cannot. We have a break, push to new extreme, uptrend played out, so we can expect correction or reversal, and true to its form, perfect price action rules, we have straight reversal into market close. So this is the overall structure for today. Very similar, almost identical to what we had 2 days ago. Very few setups, but you can catch massive runner if you can catch this high low. So really not that many great setups, only a handful, but as you can see, this is identical to what we had 2 days ago, and this should inspire you, this should motivate you, because you can already understand how price action works, and while you're watching this live, you already know exactly what's going to happen. Because price action repeats over and over again. It's not going to repeat every single time. It's definitely not going to repeat day to day like we had only 2 days ago. But price action is definitely repeating over and over again. And you can see that there's a reason to this. And once you get more experience, your gut feeling will be developed more and more. And you will understand what the market will do based on the experience, because you witnessed this and you traded the same structure many times. So even though there are not that many setups, you should not feel discouraged if you didn't take any setup, because at least you acquired the skill to understand what's going to happen and where the market is going to go, and getting the solid foundation is crucial to the long-term success in trading. You can make a case for a couple more aggressive setups. For example, this breakout pullback, 2 key entry points, and this sort of like a hidden second entry long. So there are definitely a few more aggressive setups that a certain type of trader, more advanced trader, can consider. Some trader also can consider selling this triple test because the overshoot is generating stronger pullback, but this one is definitely more aggressive. These two right here, the breakout pullback and this hidden second entry long, they actually make sense. You can make a valid case because you have many key entry points. It's just they're not that novice friendly. Either way, I hope you had a great trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.